Today we're going to talk about down payment assistance programs. Guys, down payment assistance programs are there to help buyers pay for closing costs and or down payment. Now, I'm going to be upfront and honest with you. I don't think every down payment assistance program is truly good. You've really got to look into the details to understand how each works. There are so many of these programs on either the national level or in the local community level, and they're all so different. We're going to jump into what I'm talking about, but first, I'm a mortgage lender, and if you're new to the channel or if you've watched us before, I appreciate you finding us. I hope that you find this information I'm about to share helpful. If you do, please like and subscribe. Let's jump into it. Down payment assistance programs. Like I said, these are programs that on the surface are there to help home buyers cover and pay for down payment and closing costs. However, they are not all good. There are some that you're better off skipping and not even messing with. So I want to talk about, in general, the different types of down payment assistance programs. Again, like I said in the intro, there are so many different, we're going to call them DPAs, down payment assistance programs, DPA for short. There are so many DPAs out there that it's impossible for me to cover them all. In fact, it's impossible for me to be an expert on every single one of them. We do offer down payment assistance, and I do know a lot about them. So let's just kind of overview the different types of programs. So you're going to have some down payment assistance programs where you get a grant and you don't have to pay that money back. It's truly your money to cover down payment and or closing costs, however you choose. Usually in these programs, there's not enough to cover both. Some of them there is, again, on local levels. Sometimes there's really great programs that give you more money. But again, you got to look into the details. So if you get a program that's a grant and you get to keep the money, that's great. I'm going to tell you though, a lot of these DPAs, they will give you a grant, or they'll give you money, I should say, to help with down payment and or closing costs. However, there's some sort of catch that states that you have to pay those funds back if you're not in the home for a certain period of time. Some programs actually make you qualify for a monthly payment associated to however much you get in assistance. So let's say you get $15,000. They're going to take that $15,000 and amortize it over 10 years, some of them 30 years, and add in that payment to your qualifying, which makes it harder to qualify for a mortgage because you've got another payment in your debt to income ratio. And again, sometimes you have to pay those grants back if you refinance or sell the home before 36 months. Some of them are 60 months. So you really want to understand what you're getting into with regard to the actual assistance funds. Are you going to have to pay that back? Or is it a true grant that's yours and you forget about it? It's forgivable from the get. You got to understand that. It can make a big difference. I'm going to get to that in a minute because right now, when rates are still a little bit higher, it really matters when you go to refinance when rates drop. If that happens in the next, say, 36 months and you have a repayable grant that you have to pay back, you may not be able to refinance without having to pay back those assistance funds. So were they really ever assistance? No, you paid them back. So there's an argument to be made. If that down payment assistance program gets you into a home, then that's great. And I don't necessarily disagree with that. I just think you need to be fully educated when you go into it, knowing how this program is really going to help. Sometimes it's better to do a low down payment, conventional or FHA loan, or obviously if you're a veteran, a VA loan, and skip the DPA. Sometimes it's better to use the DPA. It just depends on all the details. So number one, there are payable and non-repayable grant programs or down payment assistance programs. So that's one of the biggest things you want to look into and understand. Now, the other piece that's really huge right now is the interest rate. Oftentimes, not all the time, but oftentimes these down payment assistance programs, guys, they come with these elevated and bloated interest rates that are 1-2% higher than market. So again, you're getting into a mortgage that while they're giving you some money, they're also charging you an obscenely high interest rate, which is going to possibly limit your qualification, and it's going to increase your monthly payment. So you want to understand all of the programs, because I'll tell you at the same time, there are programs out there that actually have on DPAs that have interest rates that are lower than market. Sometimes those programs run out of funds first and get shut down temporarily. Obviously, they're more popular. They get used first, and so they run out of funds first. But you want to make sure if you're going the DPA route to have a loan officer that understands DPA, because with the interest rate in mind, a lot of these programs carry bloated interest rates way above market. Some of them offer below market interest rates. So it's a huge discrepancy when you're in this arena of mortgages and looking at DPAs. Now, lastly, I'm just going to give you these three main categories on DPAs. So we've talked about the grant part being payable, non-repayable. We've talked about the interest rate being bloated or actually sometimes below market. Last, in this section, I want to talk about the fees that go along with a DPA. Again, there are so many variables and different kinds of DPAs, but oftentimes you're going to see that a DPA has inflated fees or higher administration costs. So I'm going to give you a real example of a program that offers down payment assistance funds in the amount of 3.5% of the purchase price, and it couples with an FHA loan. So if you look at this particular program, it charges an additional 1.5% in fees. So that 3.5% is now whittled down to really a net of 2% in true funds, and this program has an elevated interest rate. So if you take just that one program, and I'm not saying that all DPAs are this way, but this program, you really want to make sure it fits your needs, because if it doesn't, you're really strapping yourself down to a net of 2% funds. That if you take the 3.5 grant funds minus the extra 1.5% in fees that is charged for this program, you're at a net of 2% in assistance funds. So you're already kind of behind the 8 ball there. And then you've got additional fees that go along with this loan. On top of that, the rate is about a point to 2 points higher than market. So let's say you use this loan to get into a house. And if it's the only way to make it happen, guys, I get it. And really that's when this program makes sense. If this is the only way, meaning you need the down payment assistance and then a seller's paying your closing costs, so you're really not coming in with anything, that's kind of the only scenario where this one makes a lot of sense. But if you go into this one and you get this higher than market rate, and rates are already starting to drop, so let's say in 6 months, FHA rates drop even more, and you're at 7.75 and FHA rates are at 5, and you want to refinance and you're sitting there going, I can't refinance because if I do in the first 36 months, I've got to pay back all this down payment assistance. So that's either going to come out of your pocket or out of your home's equity. In 6 months after buying the house, guys, you're probably not going to have enough equity to roll in that repayable grant. So you're going to have to come out of pocket, and it's not going to work. You're basically not going to be able to refi. Those are the things I want you to pay attention to. These are things we do in our sessions with our clients so they know what they're getting into. And again, if it's the only way to do it and the client knows it and they're comfortable and it gets them into home ownership and they tap into all the other benefits of home ownership, great. But other than that, if you're not educated and you're getting into it blindly, you could really be in for a big surprise down the road when you go, oh, rates are great, I want to refi. So that's the three main categories of down payment assistance I want to cover. You make sure you're educated on, you understand your DPA program. So let's go to the next part here. I want to talk about who qualifies. So this is a little bit more optimistic, let's say. A lot of times people think of down payment assistance programs as being there for just first-time home buyers, or being there for borrowers that have under a certain amount of household income. If they earn over what they call an income cap, then they're not eligible. There are certainly DPAs that fit both those criteria. You can't be a repeat home buyer. You can't make over X dollars a year household income. And again, I'm generalizing because there's so many programs. We would be here all day and all night if we went through all of them. But the good news is there are a lot of DPA programs, that you don't have to be a first-time home buyer, or you don't have to have a certain income. You can earn whatever income. You can be a repeat home buyer. So there's a variety that actually caters to repeat home buyers. They don't cap you on income. So that's really, really good news. The other piece is these down payment assistance programs typically connect to another type of loan, a first loan. And you've got to qualify for that type of loan. So when we're talking about who qualifies, we're talking about not necessarily having an income cap, not necessarily having to be a first-time home buyer. And you also have to qualify for whatever the primary loan is, whether it be FHA, VA, conventional, USDA, and your loan officer will make sure of that. But that's a key here. So if you're wondering, do I qualify? I can't tell you in general because there are so many variables, but just know there are a lot of options out there. And these programs have become more flexible. You just want to work with a loan officer that's an expert and is going to guide you through all of the nuances of these DPAs. Make sure you're getting into that right DPA for your situation, and you've got to make sure you do the proper planning, guys, because they can be great, but they can also be really problematic if you don't know what you're getting into. So let's recap. You've got kind of the three main categories to be aware of on DPA loans. You've got whether it's a repayable grant or non-repayable, okay? And then you've got the different types, which is too vast to cover in this video. There are so many different types when it comes to DPA. And then you've got who qualifies. Again, very wide open on who qualifies, guys. If you have questions on this, please call or text me. You can email me. I'll respond personally. We don't sell our leads from YouTube. We actually work these as personal clients. So I'd love to offer some assistance if you have questions on down payment assistance programs, whether it's right for you or not. Again, sorry for some of the generalities in this video. This is such a wide open topic that I thought it was more important to share what to be on the lookout for rather than go through and create a video that itemizes how all of these different DPAs work. It would be a really long video to do that. So call, text, email if you have questions, guys. We're here to help out. Hopefully you found this information helpful. I appreciate you taking the time.